Good morning, it's me, Kenny Polkarian. Here I am in New Jersey, and how can you tell? Because I got my Wawa coffee. I stopped to get a cup of coffee and a breakfast sandwich at Wawa the way everybody in New Jersey does. So if you're from New Jersey, you know exactly what I mean. So today is Monday, July 11th, 2022. And here's everything you need to know about the markets, what happened last week, and what's happening this week, as it is a big week, right? CPI, PPI, and earnings all this week. We're going to watch what the Fed heads say on Wednesday afternoon after we get the CPI report, which is expected to show a jump of 1.1% month over month. And what are the big banks going to say on Thursday and Friday? Are loan reserves losses going up? Is that something we need to be concerned about? Because there was a big article over the weekend, auto repossessions are on the rise. And could that be the canary in the coal mine? And what are we having for dinner? Well, we're going to have a Porcini Rub that you can use on a range of things. We'll get to that in a moment. So employers continue to hire, right? The NFP report showing that we added 372,000 jobs to the lineup, leaving us still down 11% from the pre-pandemic levels. And at the current rate of job restoration, we should realize a complete recovery of those losses due to COVID sometime in the third quarter of 2022. The average recovery rate right now stands at about 89% per state. That's the average. There are 13 states that have fully recovered, while only 2 remain well below the average, and those would be Hawaii and Louisiana at sub 70%. Unemployment remains at 3.6%, equaling the February 2020 rate pre the pandemic. The labor market shortages ratio across states equals 1.9, meaning that there are nearly 2 job openings for every unemployed person. However, it's glaringly acute across the West and the Midwest. Why? Not so sure. And these shortages are the reason that wage growth continues to be elevated, leaving the states with the higher ratio of openings seeing the highest level of wage growth as they try to attract workers. The labor participation rates fell to 62.2%, suggesting that people are dropping out of the workforce. Average hourly earnings month over month was up 0.3%, while year over year earnings grew by 5.1%. Now that's great, but inflation's running at 8.6% and expected to go higher this week. So workers are still behind the 8 ball. We'll get to more on that in just a minute. So what else? Lonnie Musk stuns Twitter and the arbitrage trading community that all jumped on board by dropping his $54.20 bid for the company. Not trying to renegotiate, he's walking away. All because Twitter refuses to produce the accurate user information that he has requested. Now, to be fair, Lonnie, with his bull in the china shop personality, supposedly signed those rights away when he made the bid, most likely against better guidance. But now that's at the core of what's next. And what is next is that Twitter is trading down nearly 9% in the pre-market, which means it's trading at around 34.5, right down $3.30, which is expected to erase about $2.2 billion worth of market value. It's now $20 below his original bid, and it's probably $10 above what it's most likely worth, right? And as you can imagine, the Twitter board, though, now is crazy, and they're committed to closing this deal on its original terms. The street speculating that this legal maneuver is going to take months, if not years, to resolve, and that the lawyers are lining up. Because guess what? It's going to be a rich trade for them. Musk and Twitter are expected to see scores of lawsuits. Legal rates, especially in this case, are going to make new highs. So I guess we could say Lonnie is now at the root of wage inflation, at least in the legal industry. Okay, now for this week, right? We got a lot going on, and it all happens on Wednesday and Thursday and Friday. The CPI, the Consumer Price Index, and the Producer Price Index, PPI, they're both coming out, and you can feel the tension in the air. Now, the estimates for the CPI suggest that we should see a rise of 1.1% month over month, which then equates to a 13.2% annual rate, right? Do the math. 1.1 times 12. It's very simple. All while they tell us that the CPI year over year is only expected to be up 8.8%. So someone missed 4th grade math class. I'm just not sure who it was. In any event, we're going to find out. And the PPI, the Producer Price Index, is supposed to show a monthly increase of 0.8%, a year-over-year increase of 10.7%. So anyone who thinks inflation has peaked or is slowing, you better put your glasses on and do the calculation all over again, because it is not slowing, nor has it peaked. The other event happening on Thursday is the start of the beauty pageant, right? Earnings season. And the moment of truth is only hours away. So let us see who's right. It's hard to find many analysts that do not agree that earnings are still too high. Consensus appears to be just that given the tough macro environment, a slowing economic growth, rising inflation, it's surely going to hit the bottom lines this quarter. The kick in the pants is going to be if the guidance suggests that we're going to see the same pressure in the third and fourth quarters as well, because that's not currently priced in. It's going to be the big banks that kick this all off, right? All while earnings here are expected to be okay in the banking sector. Watch for what they say about loan loss reserves. Are the allocations for those reserves rising as they prepare for tougher times ahead? That's going to tell a lot, right? Rising rates are adding to the bottom line, but are those same rising rates going to push the country into a tough recession? So watch for JP Morgan, Bank of America, Citibank, Wells Fargo, Goldman Sachs, BlackRock, all on the docket this week, right? All ready to release their earnings. Look, analysts are always trying to play nice in the sandbox with companies that they cover, right? They're slow to cut estimates because that sends a negative message, and the company's CFO won't answer the phone anymore when you call it. But if these companies begin to report weaker results and offer weaker guidance, then the analysts are going to have no choice but to cut forward estimates. So sit tight and strap yourself in. Earnings, which were expected to grow by 11% this year in January overall, have been coming down, and they range anywhere now from 0% to 6%. And this decline in estimates has caused stocks to tumble, taking the multiple on the S&P down to 16.4 times earnings, down from 21.5 times. And if the forward guidance is even weaker than the expectation, then watch as the current multiple comes under even more pressure. So think weaker prices still ahead. 10-year treasuries ended the day yielding 3.08%, up significantly from last week's lows of 2.79%, and likely going higher after we get the CPI and the PPI report this week. As noted, the Fed is expected to raise rates by 75 basis points, right? That's well known. It's priced in, taking Fed funds to 2.5%, leaving September 20th and the 21st as the next target date for the FOMC meeting and a rate increase. Analysts and strategists suggest that we're going to see only a 50 basis point move then, but it's way too early to make that call with any clarity, right? We have 2 more months of inflation data to contend with before we get to that meeting, so a lot could happen, and it could happen either way. Oil ended the week at $104.70 a barrel, and it's trading down $2.50 this morning at $102.20. Someone is running with the demand destruction story again this morning as they warn of a coming recession and a global shutdown and what that's going to do to the price of oil. Over the weekend, there were all kinds of stories about the guys who repossess automobiles. In fact, these guys are buying land to use as parking lots since the rate of repossessions is expected to surge, and they will need a place to put all these cars. So I guess you could say that the price of used autos is about to plunge because there's going to be plenty of supply in these repossessed autos, and they will be sold then as used cars, right? There is a story in Barron's detailing this exact point that I made, and then the implication of what that means when auto repossessions start to rise. What's it mean about the economy? What's it mean about the state of consumer? And by the way, Barron's also has another great article about how Uncle Warren thinks that energy stocks are cheap, right? Buying $40 billion worth of Chevron recently. Just wait until he realizes what the coal stocks have done and will do as winter approaches in Europe, because they're already sparking up the coal plants in Europe to make up for what's expected to be a disaster because of Russia. This morning, U.S. futures are down. The Dow down 165. The Nasdaq is lower by 100. The S&P off 25. The Russell off by 15 as we head into what is surely going to be an interesting week. There's no economic data today, but there's plenty by midweek, so expect all the chatter and speculation to be around what we're going to see. European stocks are also lower this morning, with all the major markets across the region down about 0.75%. Concern over the coming U.S. inflation data, along with the start of earnings season, is weighing on stocks for all those reasons that I noted above, right? Concern over what the guidance is going to be, concern over what margin is going to be, concern over a lot of things, right? The S&P closed at 38.99 on Friday, and with futures pointing to a lower opening, it's easy to see how it could be on the way of testing S&P 3600 over the next couple of days. Much of what happens is going to begin on Wednesday, and when we get the CPI report, expect to hear more speculation about what the Fed is going to do. Remember, JJ did put a 100 basis point rate hike on the table last month. And if the CPI and PPI are stronger than the estimates, do not kid yourself. We're going to see the conversation turn to a 100 basis point hike almost immediately, the way they did with 75 basis points last week, just 2 days ahead, right? Because the Fed is nervous, right? The Fed members are nervous. They realize that they really missed the boat, that they missed all the signs, or they just chose to ignore it. Whatever it was, right? They chose to ignore it, hoping it would go away. Whatever it was, it was. But now they're getting nervous. So how's that working? 2% annual inflation rate? That's not happening anytime soon, especially if the CPC month-over-month print comes in at 1.1%. But again, do not panic, because I think much of the damage has already taken place. S&P 3600 is in the line of sight, but I think it holds. If it gets there, I think it holds as long as we aren't in a recession that they tell us we aren't in. If they finally concede and admit defeat, then the S&P 3400 could be in the cards. What I do not see is S&P 4800 by year end, the way that JP Morgan and Oppenheimer and RBC, UBS and BMO and others do. I'm in the 4,000 and 4,200 camp right now. Look, you need to stay focused. You need to continue to put money away in your tax advantage accounts. You keep it in cash if that makes you comfortable. You can be patient, or you can continue to put it work taking advantage of dollar cost averaging. But in any event, make sure you just keep putting it away. All right, so what are we having for dinner tonight? Well, this is great. It's a Porcini Rub, and you can use this on lollipop lamb chops. You can use it on a grilled ribeye. You can use it on other cuts of steak, but those are the two where I like to use it the best, right? This is all about the rub, right? How to use it, where to use it, how you make it. It's all up to you, right? So for this, you're going to need dried porcini mushrooms. You need sugar, salt and pepper, garlic, olive oil, and balsamic vinegar. You want to grind 1 ounce of dried mushrooms until it's really fine, right? You can use a mortar and pestle. You can use a food processor. You can use anything that's going to really grind the mushrooms into like a powder, right? Next, combine the mushroom powder with 2 tablespoons of sugar, 1 tablespoon of salt and pepper, 4 garlic cloves, and about 1/4 cup of olive oil. Mix it well, kind of set it aside. You can make a container of this rub up to this point and store it in the fridge in a sealed jar for weeks. When you get ready to use it, though, you want to take it out of the fridge, take as much as you need out, let it come up to room temperature. And then mix and massage it into the meat of your choice. I use these, like I said, on lollipop lamb chops and on a ribeye, right? So I massage it really well into the meat of the chop or the ribeye. You want to, if you're going to do the chops, I will put them under the broiler, and you let them cook on each side till nice and crispy, and then you take them out. And you slice them up. They're delicious, right? You want to turn the broiler on high. You want to place the chops under the broiler. You can also do them on the grill, but you have to be careful because they cook fast and they'll get dried out. You don't want to dry them out. Last thing you want to do, you put them under the broiler, they get really nice and crispy and they're great, right? You want them to be juicy and crusty. They're delicious. Once they're done, you want to arrange it. You want to take a nice plate, put a bed of arugula salad down, season it with salt and pepper, some fresh lemon juice, a splash of olive oil, drizzle some nice balsamic over the top, and then lay the chops on top of the arugula and present it that way. It's beautiful. Now, if you choose to use a ribeye, then you want to massage your ribeye, put it on the grill, cook it up 4 minutes per side, let it rest, and then serve it tagliata style, right? Now, tagliata is just the way you serve it. All that means is that you slice it thin and then you fan it out across the plate. Now, you also want to top that with arugula and shaved Parmigiana cheese if that's how you're going to do that one. It's simple, it's easy, you enjoy it with your favorite wine. Again, I would drink, for this, I would actually drink, a more robust wine like a Brunello di Montalcino, right? It's silky, yet it's so robust and so delicious. In any event, the week is about to get started. Take good care. Until tomorrow, I'll see you then.